Now there may be times at which the company may just distribute the profits to the shareholders in some or the other way. Now let's just take an example. Suppose there is a director, Mr. A, and he is renting out his godown to the company. Okay. So now when a director rents out the godown to a company, the director will claim what? Will take rent from the company. Now suppose we say the rent is rupees 90,000 per month. And the director asks the company that give me an advance of 100 lakhs for construction of 2 more floors on the godown. Now in this case, obviously it is obvious that this 100 lakh is nothing but the advance rent given by the company to the director. But as per section 222A, even such a benefit which is given by a company to a shareholder will amount to deemed dividend. So in other words, 222A is distribution by a company of assets to shareholder. In our example, the asset is the 100 lakh rupees which the company will give the director for construction of additional 2 floors, to be considered as deemed dividend in the hands of the shareholder. So this 100 lakh will be taxed under IFOS in hands of the director. Okay, so irrespective of the fact that this 100 lakh is to be adjusted in the future against the rental expenditure, we still consider it as a taxable income in hands of the director. Now all these provisions, all the 5 sections which we talked about, they are limited to the extent of accumulated profits of the company. By accumulated profits, we mean the general reserve of the company, or you can say the profit and loss credit balance. So let's understand this concept with an example in the next slide. So suppose a suppose a CHC means a closely held company which has a reserves of 1 lakh rupees, is transferring asset worth 1.5 lakhs, that is fair market value 1.5 lakh, to a shareholder. Now, as we saw in the previous slide, the taxability in hands of the shareholder will be to the extent of the accumulated profit of the company. In our case, accumulated profit of the company is only 1 lakh. So, even if the company is transferring asset worth 1.5 lakhs, taxability is only 1 lakh and not 1.5 lakhs. So, the shareholder will be taxed for 1 lakh rupees under section 222A as a deemed dividend in the head income from other sources. Now, another 2 sections which also come into play is section 1034 and 115O. Now 115O says that dividend distribution tax is to be paid on this 1 lakh rupees by the company. So obviously if the company is going to pay DDT on this deemed dividend, then the shareholder shall be exempt. Now this exemption is stated by section 1034. So then we say section 222A read with 1034. That means in the hands of the shareholder, 1 lakh shall be considered as deemed dividend. But because the company pays DDT under section 115O, the shareholder is exempt under section 1034. Also, one thing to notice, the dividend distribution tax is only applicable to an Indian company and the rate is 16.995%.